welcome to Matt and Abby.
Thank you. Oh, thanks.
Thanks, Michael. Well, it's great to be in Texas. We don't do these in the Northeast anymore. We need to get the politicians and regulators a little bit more on it, but you're here.
Yeah, we like Texas.
We love Texas. You're also here in the bear market. So the price of some of these assets is down more than 80%. Why are you still here?
Yeah, it's a little chilly out, isn't it?
Yeah, it's not your first bear market, though, not your first winter.
Not my first bear market. Well, so I'm here because it's fun, it's fascinating, it's challenging, it's new and different, and Matt, what would I really rather be doing?
Well, I wish the sentiment was the same across all of your peers in the financial services landscape, but I'll say this: a lot's changed since you made your initial speech at Consensus in 2017.
Yeah, that was seems like yesterday, but it is different. So, but I think this is such fascinating space, and I've been interested in it for many years, and it started with me and a few other senior execs at Fidelity who just started hearing about Bitcoin, and I don't know, we were just curious. We were like, what the heck is this thing? Let's find out if it's real or not. And it kind of started as just something we were interested in. We just really wanted to find out if it was real or not, because some people were saying it was real and some people were saying it was fake. So, well, what is it? And those of us who really spent time on it thought it was pretty real, and that perhaps there was something to learn about what might be in store for our own future by looking at it more deeply. And so we just kept talking about it and asking questions, and the more we talked about it and asked questions and explored, we found we had even more questions, and it just kind of snowballed. And so I've always found it really useful because the whole concept of, back then it was all about Bitcoin because that was the only thing that there was. And I think as a legacy financial services company, a management team, I think what got our attention was the idea of this clean slate approach to finance and moving money and storing wealth, which at its core is what our business is all about. So understanding that gave us a very different perspective on our own business. And we've always been a company that has thought about continuous improvement. Kaizen is a concept that's floated around our company for decades. And so all of a sudden, wow, here's a radical new view, and that gives us some perspective on how we might think about what we do today differently. So whether there was a business there or not, that was meaningful to me and a bunch of other people.
As you're saying that, I'm just thinking that you're describing traveling the idea maze, which is what a lot of people in this room have done over the past 5 to 10 years, really, is just understanding this technology at a deeper level. So maybe just talk a little bit more about what that journey was like. What did you try? What worked? What didn't work?
Well, the answer to all of those things was a lot of things. So in the early days of just asking questions, we made a long list of use cases. We thought, okay, what are we going to do with this great new technology? And how can it help us run our business better? And how can it take us into new areas? And so I remember some number of months or maybe a year into it, we said, okay, let's try to do something. So we made a list of use cases. I think we had a list of 52 use cases. And we thought, okay, we're going to get these out in the organization. We're going to test and learn and see what we can get going. And so we parceled them off, and we engaged people throughout the organization, which was actually really useful because it introduced a lot of people to the idea that we were working on this and thinking about what it might mean for the future of our industry. And so anyway, a couple of years after that began, I think we had one use case that actually turned out to have near-term promise. I still think some of them might be things that were just ideas before their time, and we've maybe put on the shelf for a little while for when the time seems right. And so it was a lot of ups and downs, and in the end, pretty much everything was a lot more complicated than we thought it was. And the contrast of the old legacy world compared to some newer, brighter vision of the future was a bigger reach than we thought.
So, but you've always approached this space. It's not like you were trying to put lettuce on the blockchain. You're coming at this from a very grounded place of understanding the open source communities and just the people behind these public blockchain movements. What does that look like over the years, and what have you learned?
Yeah, so we made a practice of trying to invite lots of people from the ecosystem in early. We hosted lots of meetings, and many of them were very well attended by our associates. And in fact, it turned out to be a really good internal recruiting mechanism. So we would have people in. I remember very well Vitalik's visit in his early days to Fidelity. As you can imagine, a very well-attended event. And we publicized them and we made them available virtually, which we hadn't really been able to do technically that well before. And so what that created was a way for people who were interested in this space and were maybe working on it in their own time to raise their hand and become involved in projects and even take full-time roles as they became available. So I think that helped us build momentum in the space. So we had, we formed the Bits and Blocks Club in, maybe, I can't remember, 2014, maybe, something like that. And started these workshops and just giving a way for a broad group of people in the organization to get interested and get educated. So I think that made a big difference. And then people from at a more senior level sort of pushing these ideas of use cases for people to work on through the organization. But a lot of them ran out of steam and had to get put aside. So there were some tough times.
It's an interesting story of just trying to get to the point of finding that something doesn't work. I mean, as you look around the rest of the financial services, the traditional quote-unquote players, there's some folks that aren't doing anything, and I'm sure you've even had within your organization folks that don't want to be doing this. So how do you manage that?
Well, so, and when you layer on, I figured this is my third crypto winter.
Yeah, you've been through a few,
So, and then when you figure on, bear markets and the securities market, I've seen plenty of ups and downs, but I see that as an opportunity, and I was kind of raised to be a contrarian thinker, and so I have this knee-jerk reaction that if you believe that the fundamentals of a long-term case are really strong, when everybody else is dipping, that's the time to double down and just dive extra hard into it, and that's usually the right move. So I'm excited about what's going. I mean, I feel awful about the value that's been lost, but I also believe that the industry has in crypto that there's a lot to come, and it's really exciting. But you asked about the people. I mean, this was very controversial in the organization, and it's becoming a little more accepted now, but a lot of people are still very confused because, and you kind of can't blame them, because financial services is a super highly regulated business. And if you've been in it for a long time, you're used to having a really tight roadmap of the rules. And now in the securities business, I mean, there have been decades, I mean, basically since the SEC was formed in the 1930s, they've been making rules. And oh, by the way, they don't get rid of rules. So, so the number just keeps growing. And so people are very programmed to find out what the rules are, understand them really well, and follow them. And if you're in the business that I'm in, that's generally a really good thing. But it makes people feel like unstable when they start moving into space where, okay, at some higher level of settling transactions and moving money and value creation, is the same, but kind of everything else is different. There's no rule framework. Things aren't really sure. It makes people feel uncomfortable, and I think there's that people have a problem with that. And then just frankly feeling confusion and potential regulatory unresolved conflicts just makes it that much worse.
At some point along the way in this journey, it became clear that there was a really nice business to be built here.
Yeah.
And it became clear that people wanted to use Bitcoin as a store of value asset, and they had different views on other types of assets that might be interesting. Where does the state of the business stand today in terms of the products that you're offering to customers?
Yeah. So not as far along as I probably would have hoped when we started on this journey, but we made the decision that it would make sense to start at the most foundational level, and also, by the way, where we were getting a ton of demand. And this was not on the list of 52 use cases, by the way, because I think when we first started talking about it, I think if someone had said offering custody for Bitcoin, we would have said, well, no, that's the antithesis of Bitcoin.
Sure.
Like, why would anyone do that? And that was the essence of the early days of Bitcoin. But then time goes on, and people start to think about their estate plans because they realize they're not going to live forever, and they start to wonder who's going to manage their keys when they die, and will anyone even know where their keys are? And then they start to think about custody. And there was actually quite a bit of demand that we had from advisors to people who had done well in the crypto business and had made a lot of money on Bitcoin, who wanted to do estate planning and needed to custody their Bitcoin. So that gave us a strong push into the custody business. We knew we would have a pipeline right away of customers, and thinking about what is going to meet people's needs is very much what drives our business. We're very customer centric. So anyway, it all came together that that was the right business to really start with. We had done some other things with our charitable gift fund, which had gotten us at least a little on the playing field, but not in as sort of deep a way as we wanted. So we've started to build around the custody business. And we're looking to do more, but there are some hurdles along the way. And so we keep, I think we put in the title of the talk, scan, try, scale. And so there's been years and years of scanning, which is our way of saying, looking for opportunity. What do people need? What are people asking for? What do we see going on in the marketplace? What can we actually bring to the party? And then trying things. I mean, we try things out on ourselves. We found that to be very useful. We've had a lot of employee pilots in this space that has been very helpful. And then ultimately get to what we really like to do, which is get into the marketplace and be able to scale.
So you give yourself a hard time, I guess, about the pace, but you are running a regulated financial services business, and there has to be a tension between going fast and being prudent. How do you think about that as a leader?
That is a constant tension that I think, goes to the core of the essence of leadership, especially leadership of an established company, and when you run a big legacy company, you sometimes envy the entrepreneur. Not sometimes, you often envy the entrepreneur. And my husband's an entrepreneur. He started 3 companies, and I've watched him sit at the kitchen table with a partner and write a business plan and just get off and running. And I feel so envious. Couldn't I just have a clean slate sometime? And, not that I would seriously make any trade, but so you do have to think about that.
Yeah.
And so we've tried to move at the pace, but there's a constant tension. And I think a lot of that is really healthy tension, because running a company, I say to people all the time, you can't, sometimes people just want to keep doing what made us successful in the past over and over again. And what made us successful in the past is not what's going to make us successful again in the future. The world just doesn't work that way. Even in the slow-moving, lumbering, regulated financial services business, it's still true that you eventually have to change. So looking for, throwing some things out there that are sort of far-reaching and people aren't really so sure about, but force people to keep their eye on the horizon, I think is really important. And being able to give the organization and groups of people in the organization latitude to try stuff, and maybe some of it doesn't work out, or it works, but it's not the right time, or something in the world changes, and some of your assumptions weren't right. But you have to keep pushing forward, and it comes back to that comparison of looking at Bitcoin in the early days and just that neat blockchain that made all the transactions so secure and predictable that they were relatively predictable. It got better as it went on, that they were going to happen, compared to the maze of reconciliations that every financial services business runs internally to run their business on a day-to-day basis. Never mind the maze of external reconciliations that we run to run our industry.
Right.
And how does that gap start to shrink over time? I think having our eye on a higher aspiration has pushed us, and all companies in our business as well as us have done a lot to automate and really improve the efficiency of how we do transaction processing, which is the core of what makes investing and building wealth possible.
And you had originally started with this concept of frictionless capital markets back in 2014, and looking at blockchains with the potential to impact the actual securities industry. Do you still see that future? Is that going to happen?
Oh, that's a really far out question. Well, I can tell you, we wouldn't have started on that, having that as a hypothetical world to think about as a challenge. If we hadn't thought that there would be some progress in that way. And people are talking about it way more in the industry, and has it happened as quickly as maybe I thought back then? No, but the world changes slowly in some places, I guess. But I don't know, maybe it changes slowly and then it changes fast.
And then gradually, then suddenly, maybe?
Yeah.
You have someone that reports to you that has this great phrase, innovation theater, and was always saying, we're not going to do this because this is just innovation theater. It's not worth doing. You're doing a lot of things that are not innovation theater right now. This is way more than just a team in a lab doing Bitcoin experiments. Yeah. You recently announced a 401k initiative. Talk a little bit about what you're thinking there.
Yeah. Well, can I divert on the innovation theater? So I just can't resist. I mean, when did we start our mining? I think our first mining was in 2014. And everybody thought that was, in 2014, even a lot of the crypto people didn't really want to focus on mining because they wanted to do something more interesting than mining. I don't know. They thought, let's do the next thing. And I really wanted to do mining because I thought I wanted us to understand the whole ecosystem. I wanted us to have a seat at the table with people who were, really driving things. And I thought we would just understand the whole stack, whatever the whole stack turned out to be, better if we operated at the most basic level. And so we did the use case, and people, no one thought the financials were really that attractive. I mean, they were kind of okay. And I don't know, I just really wanted to do it. So we put together a proposal to spend $200,000 on mining. And so it's like, great, okay, let's just do this. And so everyone was like, okay. And some people were excited about it, but it was a little mixed. Some people were very pumped. And, the first PO we put in, got rejected by finance because, they're like, what is this? Like you want to buy a bunch of boxes from China? Like, I think the security people got in the action. They're like, no, you can't do that. And, I kind of had to walk down to people's office and say, like, look, it's $200,000, we're doing this. And, so we get the boxes, we plugged them in one place. It was okay, but the electricity rates were horrible, so we quickly had to put them on a truck and move them to another Fidelity location where the electric rates were better. But anyway, I mean, after that, so in 2014, and then at one point, you couldn't even print the IRR on those boxes. And, so they started out being innovation theater. Yeah. But anyway, needless to say, people kind of quieted down about innovation theater after that. So I just wanted to mention that.
The mining, I guess, informed a lot, right? It probably informed your view on custody as well. Yeah,
it did. Well, because we just learned a lot. And, we got to participate in the industry, I think, in a way that helped us understand a lot. I mean, the industry was very much in a growing up phase at that point, which we came to have a healthy appreciation for.
As you start to grow here.
But I didn't want to skirt the 401k question.
Yeah, so let's go back to that. Yeah. So as you start to build out off of this base of Fidelity digital assets, it seems like pushing into the 401k channel is a big deal. Is this something that you're going to continue in other business units, and talk more about the 401k?
Well, so I would have never thought that we would have gotten so much attention for bringing a little bit of Bitcoin to a little bit of the 401k business. As I mentioned, I mean, we're very customer centric. It started because a couple companies who, now that, I mean, the industry's big. I mean, and some companies are big and they have a lot of people and they have 401k plans and they want to give people what they want in their 401k plan. So, like, where's the Bitcoin? And so when you look across the landscape of all the 401k record providers out there, who are you going to call? I mean, I think probably the only people who could really spell Bitcoin in that business are us. So I guess we were like the obvious people to call. And so we had a few companies who were very passionate about wanting to make this an option. Their retirement plans call us. So we were like, yeah, sure, we're happy to talk to you about this. And it wasn't a call that we were expecting to get, but we have enough enthusiastic, informed people that they ran right into it. And we have a lot of things going on, and the team went off, and I spent a bunch of time, many years of my life in the 401k business, running that business for a while. But so I figured, okay, I'll see what they can do. And I don't know, I didn't actually get that involved. And the team came back, and like, we have it figured out. And I was like, oh, great. And they came up with I was very proud of them, very innovative solution to really bring the new world into the old world. And it turns out in 401k plans, the Department of Labor has made some very wise provisions, and you can put, there's an opportunity to put certain investment vehicles into a 401k plan that are not eligible in the regular retail world. And one of them is called a unitized stock plan, which was designed to hold a single thing. And basically the way it works is you can have an undiversified offering, one offering out of a portfolio of offerings that of course is diversified, but you can have a choice that is an undiversified asset as long as it has daily liquidity. And so, okay, sounds like Bitcoin to me. So anyway, the team did a great job and said, hey, we can put Bitcoin in a unitized stock fund and stick it on the 401k platform, and should work great. So we'll be rolling that out soon. And yeah, we've had a decent amount of interest. Just, you know, a lot of people, now that they've heard about it, are asking. And you know, so I've been happily surprised at the amount of positive feedback that we've gotten on that. And I think that's an example of something that it actually wasn't that hard to do, but it was only not that hard to do because of everything else that we were already doing.
Right.
If that makes sense. So it kind of was the right thing at the right moment. So one of the things that we've talked a lot about is, you know, how we in the industry can really play a bridge role, because we've got this established business, but how can we bridge the old and old and new worlds? Because how do you get to the new world when everybody's already in the old world? If you wait for everybody to make kind of a native transition, well, then you're talking about fundamentally kind of a generational change, and I think we want to go faster than that. So we have to connect the two. And you know, this was, the 401k example turned out to be kind of neat and tidy and worked out well. Some of the other ones are harder. I mean, if you think about the brokerage business, on one hand you think, well, you know, as an individual, I'd like to experience my crypto assets alongside my other assets. We hear that from people all the time. That's everybody's investing kind of view that wants to be in both worlds, that you would like to have them together and have them be kind of seamless, because from your perspective, they're all the assets in your personal portfolio. But you know, the problem is, like, the regulations don't really let you do that once you get below the user interface level.
Right.
And well, for example, we talked a lot about, did we want to have a crypto business inside of our broker-dealer? And we did a bunch of analysis, and there are pros and cons, and in the end, the con list was a lot longer than the pro list.
Right.
So that's how Fidelity Digital Assets became a completely, you know, sort of a separate legal stack from our other businesses. And so this is where, you know, seeing some of the regulators try to lean into this is very encouraging and exciting for us, because if they don't give us a route to make some of these connections, then it makes it really hard for us in the background to be able to make it feel seamless when it's really not. And if you think about this structure of, you know, anything that trades on a blockchain versus anything that trades through the legacy world of settlement, I mean, there's just nothing that's the same. So
you bring up the regulation, and certainly a lot of entrepreneurs in this room probably feel the frustration of a lack of clarity. Are you optimistic about that path ahead?
I think we just work with I'm a pragmatic person, and I just try to work with what we have. So we work with what we have, and we're asking ourselves questions like, okay, if somebody has a brokerage account and they want to buy some kind of digital asset, how do they do that? Well, it takes way more steps than anybody in this room wants to hear about.
Right.
And it ends up being kind of like a T+2 transaction because you have to move, whether it's Fidelity or somebody else, you have to move from one legal entity to another. So we're challenging ourselves to try to tighten that up, and is there anything we can do in the background to make that smoother, to make that easier? We're very focused on the customer experience. I mean, we like to make our customers happy. That is very much part of our culture, that we really thrive on getting positive feedback from our customers. That's everywhere from me down through the ranks to our frontline customers. And oh, by the way, our frontline customer service people, they get a lot of calls on this stuff because, they hear stuff in the news, oh, Fidelity doing this, that, and the other, and, Bitcoin or something else. And they think, they kind of expect that, well, the person who answers the phone at Fidelity knows all about Bitcoin. Well, guess what? They don't, because they all have their Series 7 licenses and are highly credentialed, but learning about cryptocurrency isn't part of that. And, we actually have a few who know a lot, but that's because of their own work. So, there's a whole service model in the legacy financial services business that's hard to reconcile with what you get as a customer experience in today's digital asset world.
That's fascinating. So as we wrap up here, it's very clear to me at least that what's happening at Fidelity is primarily happening because you really love this stuff. And
well, there's a lot of people. It's not just me. I have not been able to count how many Fidelity people are here in this audience, but I did hear an estimate. About 100 Fidelity people here at the conference. So, they're not here. Trying to make it's not just me. There's a lot of people who are really passionate about the space.
So maybe the closing question is, I don't get the sense that you're throwing in the towel anytime soon. If you were to do a 10-year vision of what this looks like, how big of a picture is cryptocurrency in Fidelity's business 10 years from now?
Oh, I hate those questions. I'm not good at this. Bigger than it is today.
Fair enough. Well, Abby, thank you so much for doing this.
Thanks.
Thank you. That was great.